What's up, family? This is your boy Ivan Hall, the Credit King. Here are 3 ways to buy a house with bad credit. It's reassuring to know that the large sum of money you're putting towards your home each month is going toward an investment. And, if you're a renter, your money is certainly going towards an investment, your landlord's investment, that is. If you're tired of paying someone else's mortgage, it's time to look into purchasing a home of your own. There are 2 main barriers to home ownership in America. The first barrier is coming up with the cash you need for a down payment and closing costs. The second barrier to entry is being credit challenged. And, contrary to common belief, you don't need stellar credit in order to be approved for a mortgage. Though it helps, it's far from necessary. Typically, lenders will run a tri-merge report from the 3 major credit bureaus and take the middle score. FHA loans generally require a minimum score of 580 to obtain a loan with a 3.5% down payment. Conventional mortgage loans offered through lenders, banks, or credit unions usually require a minimum credit score of 620 to 640, depending on the type and size of the loan. Though it's understandable that you want to buy a home right now, it might make more financial sense for your family to wait a while. Take a year off of your home searching and focus on improving your credit score. Typically, all it takes is a year to see significant improvement. Whether your credit score is 589 or 620, you can buy a home. You may not be able to receive the keys to your kingdom at this very moment. But if you're willing to choose a less conventional approach to home buying, or you're dedicated to improving your credit score throughout the next 12 months, you can move into your new place in no time at all. If your credit score is low, here are 3 potential options to help you purchase a home for you and your family. FHA mortgage. The Federal Housing Administration doesn't directly administer loans to buyers. Rather, they act as a liaison between buyers and private lenders by insuring the loan through the government. Since the government insures the loan, lenders are more likely to offer a loan to underqualified candidates, and also offer the loan at a reasonable interest rate. FHA mortgages are tailored to buyers with traits that most private lenders find to be undesirable: buyers with low annual income, low credit scores, fresh college graduates, or buyers that have undergone bankruptcy within recent years. FHA mortgages require a down payment of as little as 3.5%. So a home that is listed at $300,000 would require a $10,500 down payment through an FHA loan, rather than the standard 20%, which would pan out to $60,000. The credit score requirement for an FHA loan is 580 plus with a 3.5% down payment, or 500 plus with a 10% down payment. However, many lenders require 620 to 640. Seller financing. When a seller finances a home, he agrees to allow the buyer to pay the seller directly over time for the home, instead of seeking financing through a traditional lending institution. This can be an attractive option for some sellers who are dealing with an overly saturated real estate market that yields few qualified buyers, and even fewer offers. Seller financing is becoming increasingly popular because lenders are tightening up their requirements and making unconventional borrowers jump through insurmountable hoops. More often than not, a seller that is offering to finance will ask for a larger down payment in order to lower his risk. It isn't uncommon for a seller to request 30% to 50% of the purchase price as a down payment. Be aware, sellers will still charge you interest on the home. To make the offer more attractive to the seller, consider offering more for the home. For example, if the home is listed at $300,000, you can offer $325,000. This will only cost you an extra small amount per month, but is a large enticement to the seller. Always employ the services of experienced real estate agents, as they'll be familiar with this complicated process. An experienced real estate agent will be able to guide both you and the seller through the necessary paperwork, escrow account, and promissory note details. Lease to own. If you're an aspiring homeowner that cannot obtain a mortgage, a lease with right to purchase, lease to own, or rent-to-own option allows you to live in a home you select as a renter and then purchase it during or at the end of your lease. Here's how it works. The rent-to-own company, i.e. Home Partners of America, provides a transparent path to home ownership. After approval, the company will purchase the home, lease it to the renter, and provide a right to purchase it during or at the end of the lease period at a predetermined price. This option could give you time to build your credit, save money for a down payment, and prepare for home ownership. There you have it. 3 potential ways to purchase a home, even if you have a low credit score. For more credit tips, credit hacks, and credit repair secrets, subscribe to our YouTube channel or visit us online at thecreditking.com.